submit questions and comments at any time. Questions and comments can be submitted under the Questions tab located in your GoToWebinar control panel, and this session features a Q&A session following the presentation. Lastly, this webinar will be recorded, so you will be able to obtain that following the session, as well as the deck. I would now like to introduce you to Mike Diamond, General Manager of Payment Solutions at Mitek Systems.
Thank you very much, Kim. Welcome, everybody. I'm really looking forward to today's webinar. We have been very curious about a number of things relative to mobile deposit, and this is a good opportunity for us to get focused on some things that are interesting to all of us and tell us something about our progress here. So first of all, I want to introduce myself, and I want to make sure everybody's screen is advancing to the slide. I want to introduce myself and introduce our company. First of all, Mitek is the company that really created the concept of mobile imaging for financial transactions. I'm sure many of you know that the underlying technology you almost certainly utilize to provide that service is developed and created by Mitek and provided through some very excellent processors that work with you. We have over 5,400 banks that use Mitek for mobile deposit, and tens of millions of consumers. As a matter of fact, of those consumers, probably in the neighborhood of 30 million or more use MySnap, which is an auto capture that enables people to just hover the phone over the check and grab an image of the check. And we'll talk more about that. You know, one of the things that's interesting about digital channels, and I've been around alternative channels for financial services companies for many, many years in my career. And I was talking to somebody at a large bank, and he made an interesting comment about his mobile deposit users. He said, you know, the thing is that the mobile deposit users are the sorts of customers we want because they use the right channels for the right reasons. If they need to simply deposit a check, they use their mobile phone. If they need to get cash, they go to an ATM. If they need advice, they come to the branch. You know, the rumors of the death of the branch are greatly exaggerated. I'm sure many of you believe that as well. But certainly it's undergoing a fundamental shift. And getting people to use the right channel for the right reasons, lowest cost channel, but also channels that drive up satisfaction is vital. And that leads us to this next point, which is the importance of digital. I talked to an executive from another large U.S. bank who said to me, it's interesting that our digital users, the people who interact with us the most in our digital channels, also have the highest net promoter scores. They tend to be the happiest customers. And so you can see that this is a symbiotic win-win for everybody, where customers are happy, banks are happy because they have higher satisfaction with the customers, but also, of course, customers are utilizing the lowest cost channel. At Mitek, we recently did a social media sweepstakes where we asked people to talk about why they like mobile deposits, not why they like mobile deposit with a particular bank, but just why they like mobile deposits in general. We got some amazing stories from people, stories of empowerment, stories of people who are in some really tough spots, who are fighting cancer, who have children who've been in terrible accidents and need round-the-clock care. And these people just talked about what an impact mobile deposit had made on their lives and how it makes their life so much easier. People who talk about losing all of their resources and all their belongings in the floods in Louisiana. A few years ago when the big storms hit New York, we heard things. It's really just amazing. And so one of the things that, as we look at this business, is we're totally committed to learning more and to innovating. And we'll talk a little bit more about that at the end. But that leads us really to this study. Like, why did we even commission this in the first place? We think that while people love mobile deposit, consumers, and while banks are certainly happy with it, we think that the market generally underperforms the opportunity in front of it. And so we had this hypothesis. And, you know, we're smart people, and we look hard at this market, but we're certainly not researchers, and we're not qualified to go out and look at this. But we asked Jim Van Dyke at Futurion to help us understand better, is there a linkage between the customer experience of mobile deposit and customer adoption? Can one predict the other? In what is generally true in financial services is when banks roll things out, they tend to roll it out more or less the same way. and lose an opportunity to differentiate their service from another bank by putting more care and attention into their customer experience. And so that was the hypothesis. And so we turned it over to Jim's capable hands, and he and others went to work, and that's the point of this webinar, to talk about what he found. So with that, I'm going to turn it over to Jim Van Dyke.
Great, thanks, Mike. And just as with Mike's experience, I've worked in fintech and digital commerce for a long time. And one thing I want to say about the study, just as a way of thanking Mitek, really on behalf of the industry, because this is the industry I really enjoy working in, is that with me having been responsible for about 60 different research studies or reports every year for about the past 15 or more years, following me shifting from product management to the research side of things, there's only a couple I get to do per year, 2 or 3, that are in this top echelon, because they have the opportunity to identify things or bring certainty or answer big questions like the hypothesis that Mike introduced that they asked us to work on in ways that has never been done before. So rather than get at some nuance, it really has this landscape changing potential, because it's not just an independent study, but it's highly rigorous. And you don't know really when you set out to do the work, not only whether your original hypothesis will be answered affirmatively or turn out to be a null hypothesis, or if it'll create the degree of specifics that represent action steps that can be highly productive. So thank you, Mitek. Really on behalf of the whole industry, as a person who gets to work in a lot of studies, this is that rare, highest impact, highest leverage category. So quick bit about me before diving into the study itself. So I founded Futurion earlier this year after creating and then running for many years Javelin Strategy and Research, and leaving that organization end of last year after selling it to another organization. I've, on top of my experience in the first half of my experience in digital commerce and fintech is, as I mentioned, in product management. So product manager for digital banking, payments, encryption, things like that. And I also volunteer on the Consumer Advisory Board of the CFPB with a fintech focus. So we chose, when we set out to identify whether or not, first of all, Mike and Mitek's hypothesis could be answered. Not all hypotheses can be answered. Said, well, we think we can answer it. We don't know what the answer will be, but what we have to do is identify which retail banks and a credit union, maybe, are the biggest, so we can get great data on them. Could have included others, but this felt like the right number to really answer the question. So these are the 15 largest among those that are multi-channel and that we'll be presenting findings on. And we had this methodology. I won't read everything. It's on the screen here, and there's a more detailed version still in the full report that we hope you'll download if you haven't already. So we used classic designer categories. They're ones that great design shops, and I'm leading this webinar from the one at Comrade Agency here in Oakland, where I work a couple of days a week, and it was really great being a researcher working from a design shop and using CX leaders, best of breed CX leaders that did the actual rating under the research blueprint. So those of you who are designers or work with them, you'll recognize the categories that we modified from industry standards, from the people that created this. They're every bit as core to the design world as, say, Robert Gallup is to the research world. So we used actual accounts. We set 3 additional CX pricing or risk policy categories, occasionally used web data to validate further, rated everything on a 1 to 5 scale, and then went to my former company, Javelin, to get their research data, which is based on actual bank customers, using as many a data set as large as 8,000 plus. So we had some great data, and ultimately used regression analysis to correlate these two things. How much does CX drive adoption, and if so, how? So put another way, if you take these two kind of bubbles of data that you should be seeing, customer experience on the left, 56 criteria made up of 12 categories. Very, very specific, all done underneath the CX designer. Trying to look to see the degree to which there is correlation. Sometimes there's no correlation at all. In some other cases, it's actually a negative correlation to things like adoption, because that's what you're going after at the end of the day. We'll get into more detail later on about the measures of that. Well, the strongest you can get in correlation is a 1.0. It's just not possible the way the math works to get stronger than that. And if you can get to a 0.2 or 0.3, that's a pretty good correlation. It means there's some good movement, some good ROI, if you will, to move you toward your goal, which is higher adoption. And here's the finding that we came up with that we were just delighted to see, 0.72. So, and there are a lot of things we didn't measure. There's always radio static. That means you're not going to get a perfect connection, whether it's radio static in the research or people's busy lives where maybe a better CX experience. They're so desperate to use mobile deposit where it doesn't really matter for a very small portion of the population. Well, you know, we found that it's pretty darn close to the 1.0 perfect correlation with a 0.72. Very, very strong for retail banks. When you break out what we measured, because that's probably bringing up some questions, well, what exactly went into that? Now we probably have your attention. When you look on, these are the 9 UX categories that make up, you know, an average of 5 or 6 or 7 individual criteria for each. There's some that across the average bank, averaging all the top 15 on the right side, you can see the strongest scores, 92 or 90%, were in areas like consistency and standards. We were giving the average bank 9 out of 10 points on this 1 to 5 scale. And there's some areas like in the darker blue, error and prevention or item processing, they were scoring closer to the 7 out of 10. Great variance. And every single bank has some examples of what they're doing very, very well. And every bank in the study had some areas that they could work on to raise adoption even higher. Well, beyond those UX categories that I just mentioned, the 9, which are really how well the app is laid out, and you know, communication, including just the right information, not too much, and right in the right place, all that. Beyond that, there are these 3 other areas that turn out to be particularly important. On the left, fee policy. Out of the top 15, regions and U.S. banks still charge a fee. I understand the fee pressure, having worked with strategies for many years, that people are under, but my concern is that you're sending not just a mixed message, but you're putting future initiatives like mobile point-of-sale payments in possible jeopardy down the road if you're charging for something through digital that is free at a bank, branch, or an ATM. You don't get that ideal usage of the channels that Mike referred to in his conversation with a banker at the introduction. In the middle, half of banks, 7 to 15, won't allow deposits of 5,000 or more. And this was a fascinating area, and I had talked more about a case study of BBVA later. But you know, some banks have this amazingly intricate and effective risk engine that allows them to set deposit limits as high as 36,000 a month. And they're actually treating new customers the same as experienced customers among their mobile deposit users. And others are keeping it down to $500 for new customers, which for someone like me would be a knockout punch. On the right side, paper check retention also turns out to be a fairly important area for driving adoption higher, and half of banks ask you to keep the checks for 2 weeks or longer. We think the right policy is the one that Chase uses, where they say, look, we're going to tell you when the money is as good as cash sitting in your account. At that point, you can destroy the check, file it away forever in some safe place, but the message is, we got it. Don't hang on to it any longer. So what about the adoption measures? I mean, that's the end game here, right? So this is, again, based on the average bank among the top 15. So, and it's as a proportion of all U.S. adults who have a connection to the internet, not necessarily online banking users, but just people who are online in some fashion. Well, for the average bank, 41% or 4 in 10 of their customers who are online are mobile deposit users. Now, among that 4 in 10, if you look at the 2 center bubbles or donut graphs, 53% or half of those mobile deposit users are highly active. I created a weighting formula that weighted the highest people who had used mobile deposit in the last day, and second highest people who had used it in the last week. And I know what you're probably thinking, well, who gets a paper check every day? Most people don't, but because we were looking at data from thousands of customers, it could give us a nice trend line. And then looking to the 10% measure of inactives, these are essentially people who have bailed out. Their mobile deposit for them was so painful, so undelightful, that they used it and said, I just don't ever want to do that again unless I have to. And by the way, if you ever, looking deeper at the correlation scores, one thing that was really interesting was that if you were really strapped for time and you needed to look at something really quickly in your own data and you didn't have time yet to apply the results of the full study, just look at your inactive users and see what they're telling you. They will, that will have some of the greatest leverage power at predicting, kind of reverse engineering what you need to work on in design. And lastly, in adoption, and the adoption rates are very, very different from one bank to another. We'll explain why more in a moment, but essentially over a 3.5-year period, spring of 2013 to, fall of 2013 till just recently, 3.5-year period, the average bank is getting a 1.4x growth, but that varies very, very widely from one bank to the next. So the scores vary widely, and I have a couple setup slides. Bear with me because I couldn't find a way to not show a lot of data on a couple of slides, so I kind of broke a couple of presenters' rules here. But first of all, setting you up, the upper right, we rated these customer experience areas, and you'll see these laid out in columns in a moment. Efficiency of use, clear terminology, matching expectations, and so forth. And these are all the first ones listed there among the 12 are all UX areas. What's it like to use the app? And then the last 3 are pricing or risk policy areas that probably require more of a partnership for you within banks or platform vendors. And those, again, have tremendous power, along with auto capture. Just a few of these areas have the strongest power to drive adoption. Then we're comparing those, again, in our correlation to the 4 different measures of adoption. So we got very, very specific, and those are listed at the bottom, and they have the color legend on the left. So first busy slide, this one. I'm not showing you the names of the banks yet. That's coming one more slide next. But here's your column rows. And the real big takeaway here is just, wow, what a lot of color variation. So it shows that mobile deposit, given that the average bank only has 20% of their customers who are online, being among those people who are highly frequent users of mobile deposit, and I think we can do a lot better as an industry. What's going on there? Well, we don't have enough knowledge until now about what the high leverage points are for improving the experience, and we got this, as a result, this significant variation in experience that you see represented. So here's one of the, now all of a sudden probably everybody's looking closely to see where do I rank, unless you already saw it in the full study. Names are on the left. These banks are rated by quality of customer experience. And through this rating structure I mentioned, and this as a result, one thing we're able to do, by the way, is not just give you the result, the high level results here and the 2-page higher level overview. It goes in a little more detail in the study, but we can also do a full blueprint for each of the 15 banks, or any bank that's not in the top 15, by just simply putting you through the same process. That'll be a customized recipe that says, based on what you're strong or weak in, and what criteria have the strongest power or leverage to improve your adoption, here's exactly what you should focus on first or last, and what you should expect to get as a result. And that's a separate work, it's an engagement. Just wanted to mention that's available. So here's the adoption work, and if I can have your attention to how I set this slide up, because as the subheading shows on here, there's something subtle in the data. In addition to seeing a lot of variation in adoption from one bank to the next, so banks are really getting different adoption results, but mostly those adoption results are predicted by the customer experience, how great it is or not so great to be a customer. And that's, as we all know as product managers, that's not always the case. Sometimes you improve the experience and you're wondering why you didn't get the adoption you wanted. Mobile deposit is not one of those areas. You can get the results you're looking for. So on the left side, the rank order as shown on this slide is based on CX, what you saw on the previous screens, not based on adoption. You might have expected this to this ranked order to be based on adoption because, well, look at everybody in the bottom. They have a whole lot of red showing they're in that lowest quintile for adoption. In the case of regions, or close to it in BB&T. We left the rank order being that of CX, not adoption, because you'd see, wow, there's more proof, just visual proof, that CX predicts adoption. Therefore, an investment in CX gives you the adoption you were hoping for all along in the area of mobile deposit. So other key findings, and there's one more slide of data to give you some takeaway support, but the regionals are catching up to big banks very quickly, partly because the big banks launched first. Credit unions are almost as fast. Credit unions are absolutely being left in the dust in adoption, and each FI has a very unique customer experience opportunity. And lastly, each of these areas of the 12 of CX are remarkably different, some as much as 5 times different than the other in adoption power. So they're not at all equal. There's some of the data that backs up what I just mentioned for those looking for more specifics. I'm going to talk a bit about some of the design principles that, in working with Comrade, that they also presented at an industry a banking analytics event just a few weeks ago, and bringing some of the art to the science, because let's face it, there's a small pool of technology vendors and similar design principles people are working toward. So why are the outcomes so different? Well, if you see the customer experience as the journey, and we all talk about journey maps, but our goal here today is to bring more specifics to it than more than just a concept around things like limits, trust, and ease of use. Well, in this kind of a triptych look, and I'll break this out by each of the 3 panels, but in things like limits, trust, and ease of use, which happen to be particularly important overall areas that drive adoption, you can see where we've listed the banks because they had the high numerical scores or low numerical scores in those particular areas, and they're either propelling them to the highest levels of adoption or holding themselves back. Until the study, we really didn't know how that worked out. So the first area, BBVA minimizes deposit limits. And Navy Federal Credit Union doesn't let you use mobile deposit for the first 30 days with any kind of a workable limit, especially for someone like myself that has a lot of financial accounts. People are going to be looking for the bank branches, and in the case of a Navy, one of the best online leaders, this could create struggles if they don't have the bank branch network. And what we found, though, from BBVA Compass is they have an amazingly intricate risk engine. Had dinner with Alex Grias a few weeks ago, who was tasked with launching this. Hundreds of variables driving a score to determine the unique deposit limit for each customer. So Chase, on the deposit, the elimination of the paper check, Chase just essentially says, look, we got the check, just get rid of it, or tuck it away and never see it again. Others ask you to save it for these what really feel like random periods of time, 14 days, 30 days. And our view is that this sends an unintended message that the bank doesn't really trust mobile deposit. Cap 1 and Fifth Third take the picture for the customer automatically, and this can be absolutely transformative. Anybody that's used, like, say, an iPhone 7 can see how your phone essentially replaces a fax machine when it has the same kind of a capability. AutoCap works like that, and was proven out in the data to have very strong correlation power versus kind of the BB&T approach where you have to manually tap the button, create focus areas, and that will ultimately create disloyalty. So diving a little deeper into BBVA, which is punching way above its weight and was late to the party in mobile deposit, but is now the fastest growing. There, you can see actual screen captures that on the screen here. Well, they'll give you a lot of clarity around limits and fungibility, and then the option to change things like holds if that's what you want to do. It's just very, very streamlined. Some of our specific numbers, like those shown for all the 15 banks in the full study. And here we don't provide the specific scores. Obviously, we have the exact numbers, but we put them in categories to make it most easy to follow. That they're just rating at or near the very top on almost every single criteria area or every category, even though they still have opportunity to improve, like everybody. Now, their UX design, going back to that, the interface is just so clean and simple, and you can still choose some of the options within it, and you can get into single and multi-check deposit flows. Great features for higher net worth people, small business owners, that just really allow you to get rid of those trips to the branch or the ATM for all the wrong reasons. Risk policy and pricing, again, another very, very important area. They've got the risk engine and the right internal partnerships to keep the fraud losses apparently very low because they've set the limits very high. For the typical customer, it's $36,000 a month is the limit. And it's all variable based on any number of things, both going on in that one transaction and related to that one customer overall. And, you know, and other factors that risk folks will be expecting. But still, opportunities to improve, like the length of time to hold the check. So when we look at adoption and growth, so they're getting largely, one of these looks like I'm seeing it's a little dark on yours, that the second bar there is a number 9. But if you look out there, they're growing faster than anybody else, which is why we chose them for the case study and doing a great job. They went from not having much of an experience at all to being at or near the top, just behind Cap 1. And their number of inactives still has a little ways to go. There's probably a bit of a holdover from where they were. They're highly active is something they need to look at, figure out how can they improve that even further. Some of that could be driven by demographics. It's possible. But that customer adoption number, by nature of the growth, will change. They're the ones for others to be following. So what else is in the full study? Well, there's a lot, and then as mentioned before, there's a whole lot that isn't in the study as well, because we had to say no at some point to, I think when we got around the mid-50s, so it's a big, meaty study. It has a 2-page top line per FI breakout, and that's probably actually about 5% of all the data we have, but we just had to keep a standardized amount, and so that we weren't editing forever. And then we have high-level takeaway recommendations for each bank, and they also apply to you if you're in the category someone that's similar to the banks we covered, but we didn't actually specifically cover. We give detailed definitions because I'm sure there's a lot of questions we've created here today, and explanations about the criteria and the methods, and then also a marketing best practices section, which Young Fam at Comrade created. Good stuff for knowing how to market it, even though we didn't measure a lot of that. You know, marketing is vital to go hand in hand with improved products. So with that, this has been a really fun study to work on, but most importantly, one of those rare landscape shifting ones. And I'm going to hand things, Mike, back over to you. And thanks once more, Mike, for making this possible. And before I stop talking, I'll just mention that we would love to have you now, participants, start typing in any comments or questions you have. We'll see them, and we can be ready to address them.
Great. Thanks a lot, Jim. We can go to the first bullet here in terms of learnings to apply. I think Jim did a good job, first of all, of reminding us that the report itself is really meaty. So the very first thing you should do if you have questions is just start with the report and read it carefully. But a couple things to apply, and some of these have to do with the CX element that we talked about. Some of them have to do with marketing. One of them is I think that banks need to re-energize their advertising and, just as importantly, their education. There was, I think all of us are familiar with, a big spike in really clever advertising, outreach, and so forth to the market about mobile deposit. But then, as tends to happen with any business, people tend to say, okay, well, we've checked that box, we've taken care of it, people know about it, and we'll move on to other things. In reality, when I talk to people, and since I'm in this business, I talk to people on airplanes and all sorts of places. I ask them how they deposit their checks. I hear just really interesting stories. I hear so many people who are like, yeah, I didn't realize I could do that with a bank, which is hard for those of us on the phone to even contemplate that. But that's true. And remember, a check that's deposited via the mobile channel is a huge win for the consumer. It's a huge win for the bank. So I think a lot of banks need to rededicate themselves to advertising and education. Let's go to the next bullet point, please. And so this on the education, this is really important. It wasn't covered in the study. I think it's huge. Some banks are good at this. Many banks are not. You need to ensure your frontline staff is trained to walk customers through a mobile deposit, and, very important, that they are motivated to do so. Mobile deposit drives down the number of branch visits, which is good for the bank, but it can be perceived by frontline staff as being a job stealer. Realistically, if you look at the math, the attrition of frontline staff is greater than the need to let people go, and telling the frontline staff about the benefits of it, training them to take a customer who walks in with a paper check and saying, by the way, you can do this at home. Let me show you how you do this. Another idea is a lot of bank branches are being redesigned around the concept of getting people out from behind their desk and walking around with potentially tablets and working with customers as they walk in the door. You have already an existing mobile deposit infrastructure for processing check deposits. And so that's a very important thing, is to train your frontline staff to get really fired up about mobile deposit and share that enthusiasm with customers. Okay, next thing, please. The move towards smart limits. Jim talked about the wide variation of banks around limits and limit policies. We consistently hear it from customers how frustrated they are with that. I've spent time in the payments industry. The payments industry certainly thinks about things like, are you this type of customer or that type of customer? And I'm going to give you different velocity and different limits associated with your risk score. And that's something that really we need to move to in the industry as well. One size, you can advance to the next bullet. One size never does fit all. Better notifications. If you have a check, tell them. And frankly, many banks have messages on the customer screen that could only have been written by somebody back in the bowels of a compliance organization. They're totally customer unfriendly. I've got a provider that I use that says I need to store my check for 14 days in a quote secure location. And frankly, people are really turned off by that. It makes them nervous. I know of other institutions that say, hold it for 2 statement cycles, i.e. 60 days. I mean, that's nuts. And so, frankly, banks need to get better at their notifications. So you can advance to the next bullet point, please. And then finally, if you're not already using MySnap, which has this really magical power to get people even more fired up about mobile deposit, you should certainly add it to your roadmap. Frankly, every bank except 2 already offers this. It's been out in the market for quite a while. It's like I said, many tens of millions of consumers already use it. And so if you're a bank and you don't have that auto capture capability that I described, contact your the mobile deposit partner that you get your mobile deposit services from, and they can I'm sure they can set you up. The great thing about that is it gives real-time feedback to the user. It cuts down on the errors, and frankly, it's really cool, and people like it. And because they like it, they use it. Because they use it, they're happier, and banks have people using a lower-cost channel. Okay, let's go to the next slide, which is kind of my wrap-up, which is some next steps. All right, so if you haven't downloaded the full study, don't pass go, don't collect $200, just go and get the study and read through it. And then we talked about the idea of a mobile deposit health check. We're more than happy to arrange that. We would leverage the Comrade Agency and Jim in the manner that Jim had talked about earlier. We can benchmark your FI against the FIs in the study. We can give you some specific customer experience improvement ideas for your roadmap, and hopefully help you improve your transaction rates, your accuracy, and so on and so forth. So I think that would be a good place to start. And then finally, we have a product now in the market called multi-check capture, and it can be used for retail. So when somebody's sitting there with 3 or 5 checks or 10 checks or whatever, they can easily use the workflow and a capability that we've built to deposit those and make it really easy. But really, where that's ideal is in the business side. And the business, it's interesting, the business side has been kind of a laggard around utilizing these mobile technologies when compared to the retail side. And so if you don't have a discussion going on with your mobile deposit partner right now about integrating our multi-check capture in your commercial banking products, you certainly ought to do that. And like I said, if you're on the retail side of the bank, you can use it there as well. Okay, so those are some things that you can think about in terms of going forward. In one of the early slides, introducing myself, I had my email address. I'm real passionate about this business. I really love what we're doing. One last thing I'll say is that banks don't have a consistent view of what success looks like. I would estimate that across the industry, it's not unusual for most banks to be seeing something on the order of 10% or fewer of their retail check deposits coming through the mobile channel. Others are much higher. They've self-reported numbers like 18 and 20%. frankly, as an industry, that those numbers are probably abysmally low compared to where it ought to be. And so I think that companies and banks need to gun for 20% and then drive it to 30 and 35% and 40% as quickly as they possibly can. And I think that that's absolutely everybody's wheelhouse, is just some tuning up on CX and recommitting to some advertising and education. Okay, with that, I'm going to turn it right back over to Jim and the team, and we're going to take a look at questions.
Great, thank you, Mike. We do have some questions here. The first one, how exactly is growth and adoption measured? Did the FIs provide this information?
Yeah, I appreciate that question, Kim. Thanks. And thanks again, Mike, for explaining the next steps people can go down. So growth and adoption, we did not get that data from the FIs. And the data was sourced from the company I founded and using methods that I oversaw when I was there. That was Javelin Strategy and Research. So I essentially became a customer of them. And and we're happy to provide additional detail beyond what I mentioned here if it's needed or desired. So we would look at adoption. It would be a nationally representative, high-quality survey that has a statistically significant quantity of customers, never less than 200, could be as high as 800 for each of the 15 banks. So if it's one of the smaller regionals among the 15, it might be closer to 200. If it's one of the big ones like Bank of America, closer to 800 or so. But that represented a typical makeup of their customers by age, gender, income, and ethnicity. We look at those people who are, and first of all say, well, ask them a battery of 45 questions, both in 2013 and in 2016. So 3.5 years apart, and actually every 6 months for the most part between. And using that Javelin data, the customers would be asked, well, who's your main bank? And of that main bank, if it's Wells Fargo, when you're at Wells Fargo, do you use mobile deposit? When's the last time you used it? And so of that, because we measured that at both 2013 and 2016, you could look at compare that the share of customers at the two different periods of time, and then the patterns, how frequent the average. In the case I gave earlier, a Wells Fargo customer might have been, or Regions, or whatever customer was at those two different periods of time. We could have gone to the FIs and asked them to participate, and no FIs participate in a lot of those systems. The problem is, even though you get 100% of the data from the FIs that choose to participate, there aren't two FIs that are reporting the data the same way. So there's strong weaknesses in that.
Thank you, Jim. Next question was, what about banks outside the 15 you talked about today? Do you see the same trends for digital direct banks or large brokerages that also have bank accounts?
Yeah, that's interesting about that. I thought a lot about that, and there was the one slide about halfway through the deck that laid out in somewhat of a table fashion, since of in some years 8,000 plus consumers that represented the adoption data. Well, a lot of those consumers weren't at top 15 banks. They might have named a local small credit union or community bank, or maybe a top 20, the bank that was the 20th largest in the country, for example. So for those, we could look at the broad trends of consumers who said, yeah, I'm at a bank that's smaller than the top 15. And what we found was, yeah, the same overall trend is generally true. I absolutely believe that the same finding holds, which is that if you improve the CX, and especially if you use major factors that we're happy to dig into further, like who your particular competitors are, what your overall bank's overall digital goals are. If you consider factors like that, you can come up with a specific roadmap for, if you're not listed in our bank, to come up with the same findings. And by the way, you can actually have us use the same CX measurement process to understand where you would have, where your experience would have compared, how exactly it would have compared had we included you in the original study. So yes.
Thank you. Next question. A lot of focus is made on the client experience, removing barriers, etc. How are banks supposed to apply these best practices and make the regulators and examiners understand? Regulators and examiners see mobile RDC and desktop RDC as full of risks that banks cannot get control of. Thoughts on how the industry can get our regulators and examiners to accept mobile offerings with no limits, to allow use the service on day one of opening the account, etc.
Yeah, and by the way, I just realized as you're reading that, Kim, if I could, let me just mentally roll everybody back for a second, because I didn't answer part of the prior question, which is I would expect that digital direct banks, large brokerages, and even credit card issuers, which wasn't mentioned, would have similar patterns, but we hope to explore some of that in the future. So answering this question, yeah, it's interesting. You know, I'm not a compliance person at all. I probably would have been picked as the least likely to ever spend time, much less volunteer, for the 9 days a year that I spend with the CFPB on that. But I just feel I can do some good, whether it's about policies I like or don't like, by working in that area. And I'm constantly reminding the policymakers that I work with that say, hey, folks, we need to think about mobile, especially something like mobile that is more likely to be used first or solely by underserved communities. That's an important point that policymakers who are cautious by nature when they go into that field need to hear. So what I mean by that is that when you look at who's relying on mobile only because they're living hand to mouth and they're in a tough financial, they have a tough financial personal condition or business condition, those people are most likely to only have a mobile connection to their bank, not through a laptop or a traditional desktop computer. And when we look at things like risk policies, they have the potential to improve the lives of individuals. This can be a strong win-win. And, you know, I would even go so far as to say I'd be happy to strategize personally with someone or even talk with a policymaker, because if it's about improving somebody's lives while making businesses stronger, and it's something I think it's something that's an area that we all should be willing to put time into.
If I could jump in real quick on that, just to the question of how do we make the regulators and policymakers understand this. I talked to a banker at a very, very large U.S. bank who said, you know, the irony is we know more about our mobile users than we do about people who are like standing at an ATM or even walking into a branch. The mobile device gives us all sorts of things relative to location, how it's been used, how the software has changed since the last time, on and on and on. So I think that, as a matter of fact, even another thing to consider is many of you are familiar with the fact that Mitek has another element of our business associated with identity, where you can, you know, image an identity document, a driver's license, maybe even do a selfie, those sorts of things. These technologies are really, really powerful on the mobile channel. So the irony is really that your mobile users, you know a lot more about them than you do probably in any other channel. You just got to kind of get the regulators to understand that. And that shouldn't be complicated to understand. It's not a complicated concept.
Mike, I'm just going to add on to your add-on comment, because I agree. It's so important and it's so frequently overlooked by policymakers, regulators, that when you look at something like identity fraud, which hits underserved people in a worsened way than it hits more financially prosperous individuals. You know, and I know that because I've been responsible for the biggest identity theft study every year when I was at Javelin. And when we look at that, as Mike was referencing, some of the data around that, things that mobile deposits can uniquely help you or mobile, like geolocation and giving individuals more empowerment, you know, and treating people like the smart individuals that they are, and they know more about their financial affairs than anybody else. Of course, you have to know that it's really them and not a criminal. My point is the mobile platform gives more advantages to that, and the list of specifics that can be cited with a compliance or regulatory leader is long and substantive.
Thank you. Next question. What, if anything, was done to account for the community banks using processors as mobile RDC provider? Fiserv, Jack Henry, FIS, etc. How do these providers fit into the study, if at all?
Yeah, let me take that, Mike. It's possible you'll have a comment on that. You know, it's such an important area. I used to work for a platform vendor as a digital products manager and also ATM as well. And you know, where I'm actually getting on a plane in a couple of weeks as an outgrowth of this study with a banker who was just below the top 15 and said, you know, look, I get what you're saying, but I can't change the things I need to change because I'm, by design, so tightly partnered with a couple of different platform vendors. I just can't change what I want to change, and so I need you to work with them on a strategy basis. And so, yeah, we can take these findings and still apply it at the platform level. And some of the ways that I've worked with some of these regional providers or community providers that are on various platforms is in coming up with end goals that are important to a number of financial institutions. So maybe if it's a top 5 or even a top 15 bank, they alone have enough weight to get to change the marketing requirements document, the items that are on it, and the priority. But for the smaller financial institutions, you'll have to get a number of them together, but you can still use the findings in the study.
Great. I agree. You know, the one thing to say is that we had to limit the study at some point in time, and one of the interesting things about choosing these 15 large FIs is that, in general, to Jim's point, they generally exert a little bit more control over the UX, CX that they're able to provide to their customers than banks that are smaller. This is probably as good a time as any to say that this is not the only study. This is the first study. We are going to be doing another one of these in 2017. We're going to be updating the results. Likely there will be opportunities for us to answer other questions, and believe me, we have a lot of questions and a lot of insights and hypotheses and so forth, and we think we've got a good process here. And so you can expect to see something else along these lines coming out. But the question is a good one and could potentially be another area of consideration in the future.
Thank you, Mike. Next question. If you could change one thing in your mobile deposit experience that has the most impact on adoption, what would that be?
I think I'd go back to be really clear and customer friendly in communications. Clarity associated with limits and what you can and can't do. Jim did a good job of talking about that and showing a little graphic. Clarity associated with this is the service and how to use it when people are confused or walk into a branch and not realizing it, but needing somebody to help them. By the way, I did talk to somebody once and asked if she had ever used it, and she said no. And I said, she told me the bank that she used, which is one of these large 15 banks here. I said, has anybody ever, when you go into the branch with your checks, has anybody ever said, well, here's how you use it? And her answer was interesting. She said, no, nobody's ever done that. She said, honestly, if somebody would do that, I'd probably use it. She goes, I'm just, you know, a lot of people say, it makes me nervous. I don't know how it works. You know, it seems a little magical. So I think that's another element, which is just the clarity of that it's available and how to use it. And then finally, that element of the messages. I think it's crazy that think of us as consumers. What do we want? We have so much on our to-do list. We want to get things off our to-do list, and we take a picture of a check with the bank and deposit it. We want to say that's off my to-do list, but they're fed a bunch of kind of draconian messages that say, no, it's not really off your to-do list. You're still at risk. You have to do this. You have to do that, and so forth. And the notifications should be much quicker and, frankly, written by people who know how to write things for customers to read. And I think that's it.
Thank you. There's comments around transparency for the customer, letting them know limits ahead of time. How do you balance this?
Yeah, I think we did get a number of really interesting. I love the comments we get from people that actually do what I as a researcher just now talk about, having left the product management role every day. You know, they're in the banks, they're in the credit unions or platform vendors making this work, and we had a number which I really value from one person, and a lot of messages around empowerment, which I'm a huge proponent of. As long as you can trust the customer that the customer is who they claim to be, and part of that is you work with them, and proactive, visible authentication along with the passive work, then you let them help set the limits that are in place that they feel good about, that are location specific and channel specific and all those things, that the transparency for the customer is huge. And it's an automatic win when people feel like they know more. They're not left in the dark. You know, sometimes the custodial relationship where it almost feels like a big brother, big sister state around certain financial institutions doesn't create the sense of positive experience that ultimately drives the engagement highest and makes Mobile Deposit the platform for growth in beyond deposits and cards and loans and investments and so many other things. So more transparency is a really important area. Work with people to let them set some of the criteria, or that'll also raise those limits over time, and be transparent about, to the degree you can, and not wanting to give information away to criminals about how you arrive at some of the limits, where you're comfortable sharing that, so they can learn how to move those up higher. Similar to how people can learn how to, in a positive way, game the credit reporting system. So yes, transparency is good there, and share what you can.
And final question, as it pertains to check retention policy, how can institutions overcome non-conforming check return risk?
See, on check retention, that we want to, you know, I think what's important for banks, they need to be very clear in their own mind internally, and working with their partnerships with risk, their people in the risk function. And this may be asking risk people to go in some of the more conservative banks into places that they've not had to go before. Well, if Mobile Deposit is the use case that calls for it, you know, it had to be something sometime, so be it. So with check retention, I think institutions need to really, in my opinion, Mike, you might have a comment on this as well, I think need to be very clear on something they may not have had to be clear on before, which is saying, look, at some point we're going to say, make the decision internally, which then gets communicated to the customer. At this check you deposited, it's as good as cash. No more, you know, being in this kind of fuzzy logic zone. And then once we communicate that, and that needs to be as quick as possible in order to make the customer see you as the primary bank that grows the asset value, the relationship with that customer, that needs to be communicated to that customer. Now that might cause some people in the risk function or even channel leaders to cringe and go, we're just not there yet. But my take is you have to be there in order to become the number one with a customer. Mike, any thoughts on that?
Nope, I think that's spot on.
Okay, and finally, how does multi-check differ from traditional MD?
Yeah, so for Mobile Deposit, traditionally, when you think about the correlation between a person depositing a check, they have one check, they take a picture of the front and the back using MySnap or the older manual way, and they submit it, and that's that. On the business side, or multi-check capture, typically on businesses, they think of multiple checks are batched and equal a single deposit. So you have to have a batching capability, which Mitek has built. A batching capability. Think of it like a catcher's mitt that catches the checks as they come in, but sequences them, and then ties a rubber band around them and enables them to go forward as a single deposit. So if you're going to do that, then you have to have a different workflow on the front end. And so we built out a really interesting, intuitive workflow where you image in one session using MySnap the front of the first check, back of the first check, front of the second, back of the second. But you're not firing up a new session each time. It's all kind of one thing after another. The other thing too is we leverage a no amount entry, meaning that we actually, as you're doing that, read the amount off the check and display that. Of course, the customer can make a change if there's an error, but actually it works quite well. And then underneath that, you want to have something like what we call it flexible fields, where you can, for each check image, you can add something like an invoice number or something like that associated with the check. So there's a lot of work to be done to make that work well. And that's what we built. And so that's how it's a little different from the traditional retail Mobile Deposit.
Thank you, Mike. And that concludes our Q&A session. I'd like to turn it back over to Mike Diamond for any closing statements.
Oh, I don't think we can improve on what we did. We're just we're into this. We're very curious at Mitek, and we had a great time working with with Jim and Comrade, Futurion and Comrade. We didn't get involved at all in the like the data and what the results were, and frankly, we were surprised on a number of fronts as other people. But it's good to pose the questions, and it's good to learn together. We're very interested in these topics and how to move the industry forward. Please, if you have any recommendations on how you think that future studies that we might sponsor ought to be could be valuable to the industry, I'm certainly all ears. I hope you'll reach out to me. I love talking to people at banks and getting as many insights as possible from them, just as I'm interested in talking to people in restaurants and taxi cabs and airplanes about how do they deposit checks. I get a wealth of information, and I'm sure you all do the same as well. So thank you so much for joining our webinar, and please let us know how else we can do to help you guys. Thanks.
Thank you very much. That concludes our session. Following this, you will receive a survey. We'd ask that you submit that, and that the presentation will be available following this with an email.